All right, so we're looking at the E-mini S&P futures June 2022 delivery contract price action for the daily chart. Now, when we're looking at the daily chart, I want you to think about what it is that I talked about before happening, explained in great detail why it should take place, and when the chart looked like this. Remember, I was talking about how that specific order block was a catalyst for setting up a future move that shouldn't see the high of that candle pierced. In other words, that's the most unlikely level. That's being here, right here. Okay, price should not go to and through that. This is the most unlikely level to be traded to with a bearish order block. Now, for some of you, you're like, oh, can you teach order blocks? I've already taught and introduced order blocks. So with that, understand that I mentioned that we would go into this area here, not trade to the top of that candle. And all this is mentioned in this mentorship series. Go back and watch those videos. And I mentioned that we would draw down into here and into here. So underneath that low here, and these relative equal lows, that's sell side liquidity. What was the framework that led to me telling you that this is a bearish order block and we're watching that, and that could set up a run into our May seasonal tendency? Now, seasonal tendencies are times in the year where markets or specific asset classes will move generally, not always, not 100% of the time, not absolutely never going to fail. They historically have produced price swings that follow a seasonal tendency. That means they usually happen. And one of the things I like to use as an analogy would be, I live on the East Coast of the United States. So if I live in the East Coast of the United States and I reside in Maryland, okay, would it be reasonable for me to expect snow on the 4th of July? No. What's more likely? Sunny, hot. Okay, so that's the seasonal influence. Well, that same influence, not that specific, not that dramatic, obviously, but there are periods in the year where the markets have a tendency to do certain things. May tends to be a month where the market in index futures and stocks, they generally drop, they go down. I gave you that beforehand. I explained it to you. Now, I didn't give you the details about it, but just understand, going in every single year, about the last week or so of April, going into the month of May, there's usually a tendency for these markets, specifically the S&P, the NASDAQ, the Dow, the Russell, that group of markets tends to be weak. Not all the time, but generally, if you study, go back through old data, you'll see that's true. Now, by itself, it doesn't really mean much. But in the hands of someone that's initiated with what I'm teaching you, it is a roadmap to consistency. You can practice and learn a lot about price action by doing this every single year, going through old data, and then you can forward test it going into next year and all the years after. But what took place was we had these relative equal highs. I mentioned this. They took the buy stops or the buy side liquidity out. Who's doing that? Smart money. These individuals that go in and they sell to these buy stops when it's like this. And at the same time, when we're entering a period of time where there's a bearish seasonal tendency, that means bearish prices, lower expected, going into May. So we're seeing a run on liquidity here with this high. So it bumps above these highs and then breaks down. Then we go into an area I mentioned that's a bearish order block. And I said we're going to aim for here, and then under here, and then under here. Okay, so I gave you a perspective beforehand so that we could study it. Each day, looking for lower prices. Going in, looking for the pattern I taught you in this mentorship around specific elements of time. We had this big move from here down here where it attacked the sell stops or sell side liquidity. What took place here? Smart money sold to the buy stops. So now they're sitting with a net short position. How do they get out of that position? They have to buy it back. How can they buy it back at a cheaper price, guaranteeing them that they're going to be buying from lower priced sellers? Find the sell stops here. Sell side liquidity rests below here. Why are there sell stops below there? Because traders have models that want to capture these types of moves and expect things like this high to be taken out before they start trailing their stop loss. Large fund traders, not retail Rick that trades on MT4. Okay, that's not what I'm talking about. But historically, you're going to find out that retail traders are going to have many times their stop losses in the same area that large funds will. The only difference and the only contrast between the two is that retail Rick, or people that are very small speculators, the small traders, liquidity is so minute, it's tiny, it's irrelevant. All right, so we're looking at this area here, where it drops below this old low. It does it here and here on a shallow basis, but then we have this real nice decline yesterday on Monday's trading. So I want to take you into this right here and kind of like build on the idea of what liquidity does once it takes out old lows like this. What can it do? So we're zoomed in on Monday's trading here. Here's Friday's trading. I want to take your attention into this candle here, last Friday's low. So if this was Monday, go back the last 3 days. You go here, here, and here. Now, is there a fair value gap in that? No. But look what Monday's trading did. It opened, extended down, and closed near the low. It was a rather large range today. Okay, great, wonderful. What do you do with that information? Go back to the previous day's low. If you go back to the previous day's low, this is going to be important, because if you do this, the next trading day, which is Tuesday, today's production video date, the 10th of May, 2022. If we open up, and because we're below those relative equal lows on the daily chart, and we're below this swing low also, we're now, in a deep discount. We don't try to pick bottoms. Okay, we don't try to call the long-term lows while markets are bearish. If any of you are trading, try to avoid trying to pick the tops and the bottoms. There's a lot of meat in between the major turning points. And you can afford to be wrong at the end, because once you're wrong, it'll be obvious. Then you can get in sync and go the other way. If you have drawdown, just work on getting it back and then work in that middle of the move type idea. It serves you well. But I want to take this idea here, and we're going to drop down into a lower time frame after we see today's price action trade right up in here. Now, this looks like an indecisive day. So if you're looking at a daily chart, it can be a little confusing, like, what took place? This is a mixed day, they'll call it. No. Let's go into this formation right here. Okay, I'm going to give you some logic. Now, here's the time when we get into the ICT videos that a large percent of you do not want to do this part. You're welcome to obviously not listen, but you're going to miss the opportunity of learning. I want you to look at this price action and this fractal. Now, what is a fractal? Fractal is a piece of price action that's doing something that I'm trying to draw your attention to. Okay, we're studying a very small segment of price action. That's a fractal. So, if we're looking at this, and this is that old low that I extend on the daily chart, now it's being visualized on an hourly time frame. So every one of these candles is not a daily candle, which shows the highest high and the lowest low of the daily range. It's now an hourly chart where it shows the highest high and the lowest low of each individual hour interval. I want you to think about what you see here. All right, so let's add some detail first. In perspective, you want to break your daily ranges up by the day. And I taught that midnight starts to cross over to a new day. I don't care what anybody else tells you. This is how the algorithm works. It operates on this timeline. Okay, it's on New York time. So at midnight here on Tuesday, we start here. The opening price is here. If you draw that out in time, it goes up, it goes down, and it comes right back to close to where it opened up at midnight. And it would get very close to what that daily chart showed, that indecisive candle, where it was a lot of wick to the upside, a little bit of wick down to the downside, and a small little body. Okay, that looks indecisive on that time frame. But if you look closer and you start framing out the things I taught you, here is relative equal highs, old low. What's resting above relative equal highs? Buy side liquidity. What's resting below an old low? Sell side liquidity. The market runs above at 9:30. It hits that old low. That red line here, that old low, it hits that there, right at 9:30. Then, all of the buy side is purged. That means all of these buy stops have now been drug into the market by their hair. Kicking and screaming, they're in. They're caught long, or they've been short and they've been knocked out of their short position. Either way, it doesn't matter to us. We just know that that buy side liquidity is likely to be utilized to set up an idea for smart money to be short Why? Because the bias is bearish. We have not changed gears. We're not trying to pick the bottom. So if we're doing this like smart money, and we're looking at the market like this, and we want to be short up here at this trigger event, which we'll look at in a moment, where would you want to offset that short position? Well, you have a nice little short-term low here, so you can take partial below that. It hits it beautifully, and the previous day's low. And it does that run below that low here, just as handsomely as it did here. So let's go in and use the logic with this idea of rebalancing Monday's daily range, keying off of this level here. Notice that the buy side liquidity is ran first. This is really important, folks. If we would have gone down and took the previous low out, then ran up here, that to me is not bearish. This, running above buy side liquidity here at 9:30, hitting that without having this low taken out, that is bearish because it's within the context of the bias that we're looking for. When we're operating in a bearish bias, what we're essentially saying is the market's going to go up to a premium for one of two reasons. Run an old high or highs to take out buy side liquidity, so that way smart money can counterparty with them with their short positions. They're going to sell to those buy stops. Then seeking to buy cheaper sell side liquidity. That would be their pool of liquidity to offset, distribute their shorts below here. So they're going to sell here at a high price and buy it back at a cheaper price. This is not a random unknown low. It's in the marketplace. As soon as that day closed, that low is known to everyone. But the liquidity resting below that is not necessarily a target or a utilization for anybody in any other retail idea. It's interesting to see these things panning out all the time, every single week, every single day, and it won't stop. The second pool of liquidity is the sell side liquidity. So it runs the buy side first with the bearish bias. So it's doing what I taught in this mentorship. It goes up to a premium, then seeks a discount. See that? Now we're going to drop into a 15-minute time frame. Zoom on in and get a little bit more details here. And now I have added the 8:30 time frame here. And we have the relative equal highs. The market at 8:30, we're looking for what to happen? The news embargo to lift. That means that the algorithm will start seeking liquidity as early as that time frame. Now, it might wait till 9:30, and this candle here is 9:30. Notice it hits it right there where we're drawing your attention to, because it's rebalancing that entire Monday range. It's going back to the previous day prior to Monday, its old low on Friday. So when you see that, it rebalances the big drop on Monday. It tricks people into thinking that it's made the low and it's going to keep going up, when the only thing it has done is it's gone up to a logical level on that daily time frame that rebalances all of that sell-off on Monday. It's been rebalanced. So if you look at the 9th on the 15-minute time frame, this does not look like it's an imbalance. But on a daily candle, it's a large down day. So all of this movement here is big in terms of distribution on the downside. This is a retracement back up into a logical level, which is Friday's low. And it hits it based on the elements that I taught you. And it's following what the logic is that I shared publicly in this series. Look for relative equal highs. At 8:30, it's going to start looking for a high or highs to run. That's these over here. How far can it go? That's that Friday low. There's your framework. This is that Judas swing, that fake rally up. Okay? Think about what the daily candle looked like before we start dropping down in lower time frames. It was a big wick up and a little bit of a wick down, but it was a small little body on the candle for Tuesday's trading. But if you look at it from the lens of Power 3, how I teach you the accumulation, at 8:30, use the opening price that's down here, draw that out in time. The rally should take place above that, hits a logical level I'm teaching you. Then it creates the pattern that's in the mentorship, fair value gap, market structure shift. Then it starts to show displacement and distribution to the downside, attacking a discount array. So this is your Power 3, where it opens, rallies up, creates the high, and trades down. There's your move, Power 3. So here's what we have. We have the whole model identifying a setup, moving back to a rebalance of Monday's price range, back up to Friday's low. Hitting that level there, and then creating the setup that's happening at the time elements, the same way I teach it in the series. And here it is. Boom. Comes in, hits it, breaks down, pairs up with the sell side liquidity. Smart money sells short here, and then adds to it here. Breaks, trades into here during the lunch hour. Your limit order, if it was used, would be filled during the lunch hour, and not around 12:30.